Talk to us about the Foundry cooperation with Samsung Electronics. Are you, in a way, hedging TSMC?
No, hedging isn't really the right way to think about it.
How would you describe it?
We have partners that excel at the areas of manufacturing semiconductors. It is not, as you know, I make chips. There are many companies that make chips, and we make chips in different ways for different reasons and different value propositions, if you will. And so it's the same with Samsung, and they're deep and excellent in their field of semiconductors. And whenever we have opportunities where our products are perfect fit for the way that they manufacture chips, we find opportunities to work together. Today, Samsung manufactures all of NVIDIA's robotics processors.
Following President Trump's meeting with Chinese Premier Xi Jinping, AI GPU designer NVIDIA has been in the news. The president recently made it clear that he would make sure that NVIDIA's most current AI processors were not sold in China. The company's CEO, Jensen Huang, has talked about his company's operations in China. After co-host Carl Quintanilla brought up a Loop Capital report for the company, Cramer talked about the comments. There have been some misinterpretations of the president's remarks regarding Loop Capital's $350 price target, claiming that a 73% upside would reach $8.5 trillion and referring to it as the golden age of AI look. He said that NVIDIA will engage in commerce with China, which is significant, but he did not specifically mention selling them the best Blackwell. Cramer recently talked about how massive tech expenditure affects NVIDIA. You can assume that a significant portion of the money Meta spends goes to NVIDIA. So let's speak about guilt by association. Many money managers will believe it's time to sell NVIDIA, the $5 trillion monster, if Meta stock is penalized for investing in NVIDIA. I don't agree. Naturally, I am concerned about the president's plans on China and NVIDIA. Hey, I'm scared if you're as obsessed with NVIDIA as I am. By the end of 2026, NVIDIA reported $500 billion in orders for its state-of-the-art semiconductors. If this works out, NVIDIA might become the first $10 trillion corporation in history. At its GTC event on October 28th, NVIDIA made headlines. There were a number of shocking revelations, including new technology, quantum computing, and government contracts. The biggest announcement, in my opinion, is about the enormous growth that NVIDIA anticipates by the end of 2026. NVIDIA has $500 billion in orders for its Blackwell and Rubin graphics processing units, GPUs, until the end of 2026, according to CEO Jensen Huang. That rise is enormous and substantially surpasses the forecasts made by analysts for the upcoming year. If this prediction comes to pass, NVIDIA's price might more than double by the end of 2026, which could spark a huge market boom. NVIDIA's supremacy in the field of artificial intelligence, AI, seemed unquestionable until a few weeks ago. But when OpenAI, the company behind ChatGPT, announced multiple agreements with rivals like Advanced Micro Devices and Broadcom, that dominance was called into question. Investors were worried that NVIDIA would be losing its edge, even though the company also announced a deal with OpenAI. But at the company's GTC event, CEO and founder Jensen Huang allayed any concerns. The statement that NVIDIA had received $500 billion in orders for its state-of-the-art semiconductors was a complete shock. Wall Street analysts only anticipated $277 billion in revenue for NVIDIA throughout the fiscal year, even though that includes 5 quarters worth of sales. President Donald Trump's announcement that China will soon be permitted to purchase some of NVIDIA's chips, but not its most cutting-edge ones, was another significant revelation. Due to the revocation of its export license earlier this year, NVIDIA now has no market share in China. NVIDIA has requested for a second license, although it hasn't been approved yet. As a concession during trade negotiations, Trump is probably going to give China access to some chips, which might lead to even greater sales during fiscal year 2027 that aren't now recorded. Even if this doesn't work out, NVIDIA will still be a great investment. This would be yet another significant boost to the company's price. NVIDIA's growth would significantly increase if it could fulfill its $500 billion in orders by the end of 2026. NVIDIA would make $400 billion a year from its Blackwell and Rubin chips, if we assume that the $500 billion in sales are split up over 5 different quarters. This is a poor assumption, but it adds some realism to the forecast. $420 billion in revenue for fiscal 2027 would result from adding $5 billion per quarter for non-data center revenue sources, which is equivalent to what NVIDIA reported in its second quarter of fiscal 2026. That equates to $218 billion in profits at NVIDIA's current 52% profit margin. The current price of NVIDIA's stock is 57 times its earnings. By the end of fiscal 2027, NVIDIA's shares would be valued at $10.9 trillion at a little more cautious 50 times earnings valuation. NVIDIA's market capitalization is currently close to $5 trillion, which means it will double in just over a year. Recall that the prediction includes zero sales in China and a certain amount of conservatism. All of it might contribute to additional sales, making NVIDIA one of the strongest stocks available right now. NVIDIA has once again demonstrated its superiority, and investors who purchase the stock today, despite its subsequent surge, stand to earn enormously. Last week, NVIDIA surpassed other major stocks to reach a valuation of $5 trillion. About 30% of the S&P 500 is comprised of the top 10 stocks on the market. To reduce possible risk, it's critical to have a diverse portfolio. NVIDIA's stock has risen about 1,400% over the last 3 years, following years of steady, quiet rises. With a market value of $4 trillion in July, it surpassed Apple and Microsoft to become the most valuable corporation in the world. It is currently in a class by itself as the first $5 trillion stock. 9 of the top 10 firms on the stock market by market capitalization are artificial intelligence, AI, companies, and the combined value of Amazon, Meta Platforms, and Berkshire Hathaway is around $5 trillion. They make up around one-third of the S&P 500, a weighted index, making them the most valuable corporations by far. When investors discuss the market, or when the market moves, they are increasingly referring to a small number of stocks rather than the roughly 490 stocks that make up the index. Similar to the dot-com bubble that burst in 2000, which had far-reaching effects that forced some companies out of business and caused the S&P 500 to drop for 3 years in a row, the only time this has happened since the 1940s, some analysts are witnessing the development of a bubble. Is the AI bubble going to burst, given that a small number of stocks hold a large portion of the market's entire value? Spoiler alert, nobody is aware. Even though there are signs that this might be a bubble, AI has many real-world uses, and the outcomes are solid and consistent. AI is being used by people for a variety of purposes, including simplifying lives and expediting procedures. AI can create realistic-looking graphics that save time and money, identify grammatical problems in writing and enhance style, and analyze a wide range of behaviors to identify trends and assist individuals and organizations in making better decisions. According to Amazon, Meta, Alphabet, and Microsoft, capacity limits their ability to meet the huge demand. To keep up with the skyrocketing demand, they are investing ever-increasing sums of money on their AI algorithms. This year, they plan to invest capital expenditures as follows. Microsoft did not provide full-year guidance and reported spending of $34.9 billion in the first quarter of its fiscal year 2026. In their quarterly earnings reports this past week, all of these businesses stated that they would boost expenditure in 2026. Since NVIDIA produces the most potent CPUs and AI technologies, it stands to gain a lot from this, but it is also vulnerable to the bubble bursting and toppling it. It would be unfortunate for ordinary investors to miss out on profits from firms like NVIDIA due to concerns about bubbles breaking. I get, at $5 trillion, NVIDIA appears not only formidable but potentially terrifying. However, risk-averse investors don't even need to be informed that it might not be the best idea to invest in these kinds of values at this time. They're already avoiding it. Additionally, it is usually better for anyone who believes they may need to withdraw their earnings in the near future to sell and buy safer assets. However, picking certain excellent AI stocks to include in a growth-oriented portfolio makes sense for investors with a long-time horizon and a certain amount of risk tolerance. The market equivalent of the 3 most crucial terms in real estate is what these investors must keep in mind. Diversify, diversify, diversify. Investing in NVIDIA right now is fantastic. I suggest it. However, you must ensure that the risk assignments, categories, classifications, and industries in your portfolio are all balanced. It's not a very secure portfolio if all you own are AI stocks. Investing in Amazon, Meta, or other high-value AI firms should be reconsidered if you purchase NVIDIA. Selecting an AI-focused exchange-traded fund that exposes you to numerous AI stocks in addition to other single stocks and ETFs is another method of investing in the AI trend. Even though it may be difficult, you may wish to reduce your position if you have already made a successful investment in NVIDIA in order to reduce risk. You will still be able to access future gains, unlike selling completely. However, you may wish to diversify your holdings across a wider range of stocks. In the end, diversification is necessary for safe investing, even for growth investors, and there may or may not be an AI bubble. NVIDIA's great control over the supply chain is a major factor in its dominance of the AI chip market. According to a recent source, TSMC's 16A process now has NVIDIA as its first client. NVIDIA may be able to close the technological gap with its competitors thanks to the new agreement. Over the years, NVIDIA has been able to maintain its dominant position in the worldwide artificial intelligence AI chip market by keeping rivals at bay. The company's technological edge allowed it to remain the preferred supplier of AI chips for businesses and governments worldwide. According to reports, the business holds between 85% and 90% of the worldwide market for AI chips. Naturally, Broadcom's bespoke AI processors are a new competitor, and Advanced Micro Devices is working to make sure it can have a greater impact on this market. However, for one very straightforward reason, NVIDIA's rivals' efforts could not ultimately result in significant advancements for them. NVIDIA's supply chain management is a major factor in the company's success with AI chips. Fabless chips are produced by NVIDIA. This means that while it creates and markets chips, it contracts with a third party to manufacture them. Taiwan Semiconductor Manufacturing, or TSMC, is the third-party manufacturer in the case of NVIDIA. With an estimated 70% of the market, TSMC is the biggest foundry in the world. Because TSMC is skilled at creating semiconductors with sophisticated process nodes that pack in more processing power while maintaining low energy consumption, it holds this large proportion. NVIDIA produces its well-known Hopper and Blackwell series of data center graphics processing units, GPUs, using TSMC's 4nm (nm) manufacturing nodes. In order to produce its Rubin series of AI GPUs, the chip designer is anticipated to relocate to TSMC's 3nm fabrication node next year. Naturally, competitors AMD and Broadcom have apparently been producing their chips utilizing TSMC's 3nm production node, but even so, they haven't been able to grow their data center operations to NVIDIA-like proportions. To put things in perspective, NVIDIA's data center revenue increased by 56% from the same period last year to $41 billion in the most recent quarter. AMD's data center revenue was much lower at $3.2 billion, whereas Broadcom recorded $5.2 billion in AI revenue in the prior fiscal quarter. These businesses are all fabless chip manufacturers, and they all get their chips from TSMC. But NVIDIA now controls the majority of TSMC's manufacturing capacity. There were rumors earlier this year that NVIDIA had taken control of an astounding 70% of TSMC's advanced chip-making capability. This explains the enormous disparity between its AI revenue and those of its competitors. Apple, a prominent player in the smartphone industry, has apparently been purchasing a significant portion of TSMC's 3nm processors for its iPhones. For its upcoming iPhone lineup, the manufacturer is reportedly in possession of half of TSMC's 2nm production capability. When NVIDIA delivers its Feynman series of GPUs in 2028, it is probably going to switch from the 3nm production node to the A16 process node. The A16 is a 1.6nm process node, and that should ideally promise a big leap in computing power and power efficiency. TSMC itself points out that the A16 technology will be 8% to 10% more powerful and achieve a 15% to 20% reduction in energy consumption compared to the 2nm process node. The 2nm node itself promised a 10% to 15% improvement in performance, along with a 25% to 30% drop in power consumption. NVIDIA, therefore, could deliver a much more powerful AI processor in 2028 when the Feynman architecture is released. What's more, NVIDIA is said to be the only company that's testing the A16 technology with TSMC. Surprisingly, Apple has not joined the battle. More significantly, NVIDIA may continue to control a sizable share of its supply because there is currently no indication that its competitors in the AI chip market are considering adopting the A16 manufacturing node. It's understandable why NVIDIA could have rushed to become TSMC's top client for the A16 process. By 2030, the business expects to invest between $3 trillion and $4 trillion on AI infrastructure. Over the next 5 years, NVIDIA projects that worldwide data center capital expenditures will rise at a 40% annual rate. NVIDIA should therefore take action to strengthen its position in the AI chip industry before competitors have a more significant impact. Customers are likely to keep investing more in NVIDIA's products if the company is able to produce more potent chips that, because of their reduced power consumption, can lower the overall cost of running data centers. Because of this, it won't be shocking if NVIDIA continues to dominate the AI chip market for the next 5 years, which should result in increased returns for investors. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.